The S&P, NASDAQ, and Russell hit lifetime highs just this past week while the Hormuz is still in flames. Quarter one earnings, 88% beating a great number, but the market isn't rewarding them. And Kevin Warsh, the Fed chair hearing Tuesday, will this confirmation happen or will it not? It's Monday, April 20th. I'm Charles Brown, your portfolio manager, and this is your weekly podcast update. In one of the most blistering rips higher that I've seen since COVID, the NASDAQ, S&P, and Russell all hit lifetime highs, the strongest weekly run, I think, in years. And the real logic behind this is because oil has dropped from 100 plus down to the 80-something handle. All right, Brent crude at 95, the 10-year at 4.3%, CPI at 3.3, a little bit high, but not really a benign background. So this has all happened even with the Strait of Hormuz. And now here, as I record this on Sunday night, Iran is threatening to close, and I think have closed, except for the Trump blew a hole in one of the ships that was trying to leave of Iran ships. Oh gosh, you just can't write the script on this, folks. So this up and down histrionic behavior in the Middle East is going to be with us. But remember that what makes earnings and what makes interest rates is really what determines the direction of the stock market overall when the geopolitical histrionics have been removed. Okay, so that's what we're waiting to see this week. We are still fully positioned. Our option hedges are on. We're seeing that that's a benefit tonight here on Sunday night as the market has gapped lower. But that should be expected because, again, it's just ripped higher for well over a week now. So the Q1 earnings, great numbers so far, but a cold reception from the market. Not really sure why. Just not giving any love to these companies that are beating earnings. 88% beat, as you guys know from history, a 70% of earnings forecast beats is a great number. So 84% of these companies are beating on revenue, 6 straight quarters of double-digit S&P 500 growth. Tech is leading at 45% earnings growth, Mag 7 at 22.8. If you strip out NVIDIA, which drops to 6.4, that means that NVIDIA is a really big oversize, and as you know, one of our largest holdings. I think it is our largest holding of all of our programs, but certainly in DS. So the catch is that the market is punishing positive surprises. Why? Because there was so much expected. You might say, well, the stock should always go up if the earnings beats are higher than they're supposed to be. But if there was a forecast from market participants that should have been even a bigger beat, then that's what disappoints traders and they sell it down. So the average stock is down 0.2% on beating, not usual. But you add that to the consternation of what's going on in the Strait of Hormuz, and it doesn't surprise me. So the forward guidance is the real trade this season. Watch what the CSOs are saying about half two, meaning the second half of this year. I don't listen to that many earnings reports because, frankly, it would take forever, and I am a technical trader. But if you're interested, you guys know what stocks are in your portfolios. You feel free to listen to the earnings reports from these companies. You can get them for free on the internet, and it may interest you just to see what they're forecasting for the second half of this year. I think that we will be in a double-digit return this year. I don't think it's going to be as good as last year and certainly not as good as 2024. But I do think that if we can get this geopolitical mess straightened out, take control of the Strait of Hormuz, and have basically a quiet climate over there in the waters off Iran, that we're going to be just fine in the market. And the rest of the world is waiting to see if that's going to happen. So Kevin Warsh, as you likely know, is the pick from Donald Trump to replace Jay Powell. His first hearing is April 21st. That would be Tuesday. He's known to be a hawk. So why in the world would Donald Trump appoint a hawk? Well, he's inheriting $95 oil and 3.3% inflation, and he knows that his boss, Donald Trump, wants to see lower interest rates. How is this going to play out? Frankly, I don't know. I think it's a pretty unusual call, but I think also that Donald Trump knew that he wanted to get rid of Jay Powell and had to have enough senators on his side to get the nomination passed on the first vote, or at least the second vote. So then there's an April 28th, 29th meeting. No cut expected then. Jay Powell's still in control until mid-May. JP Morgan is holding all year, saying there's not going to be any interest cuts this year. Don't know that, but that's what JP Morgan says. So the core tension is that Trump wants the cuts. Inflation says otherwise. Which Warsh shows up? The one who Donald Trump picked to cut interest rates, or the, I guess, historical Warsh, who is basically a hawk? So the DOJ probe of Powell is still alive. The Fed independence questions are not going away. I think we're at higher for longer. It's still the base case. We're positioned accordingly. Again, if we do see double digits this year, by the end of the year, it could be like 10, 11, 12. You're not going to see an 18% year. It's just not going to happen. There's too much history that's gone on here with the bears winning a portion of this. Still haven't had a correction, really. But we did have a pretty significant pullback. That's between 5 and 10%. So that's where we are this week, folks. It all comes down to the Strait of Hormuz. Are the Iranians going to relent and give up control for good? If not, I think it's going to be all-out war over there. The Kevin Warsh situation, is he going to get confirmed pretty quickly, or could this drag out for some time? That doesn't help either. And of course, the ongoing issues with Russia and Ukraine. There's just never-ending angst in the markets, folks. But this is what we're positioned for. That's why we have the options hedge. That's why we're here working for you as we do. Hang with us. We will be with you on May 14th for the next CB3 Live. Until then, hang in there, guys. We'll see you soon.